The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, Thursday's market action saw a corn market lead the way to the upside, at least tried to anyway. Some decent strength in old crop corn spilled in a new crop trade. Soybeans a little higher. Wheat was moderately lower, and another solid day in the cattle market. Let's take a look at Thursday's trade and get some perspective from Brian Doherty, Senior Market Advisor at Total Farm Marketing. Brian, good to talk with you again this week. And, these markets have been fairly quiet, I would say. We've just been lacking in a lot of fresh news, but we found some green in corn and soybeans, at least on Thursday.
Well, we did, and in the form of good export numbers for corn, terrible for wheat, and of course the cattle just are cattle. I don't even know if we need to talk about them. It's a different day, same story. They're just higher, but there's good strength under a lot of protein complex in general, but the cattle have really taken off. But back to corn, really nice export sales number today. And I think the other thing we're finding here when corn settles back a little bit, there's just not a lot, of farmer selling. So what we're hearing through the pipeline is that farmer selling slows on down days. The market seems to be content, Jesse, to consolidate in front of the acreage and stocks report, but one has to wonder. I still think I go back to 23 crop, that the crop was estimated too high by when the USDA added bushels, but gotta wonder if the stocks number isn't going to have some sort of a tone that's favorable. So we'll see. I mean, that's what reports are about, the new information, but yeah, good export sales. I'm going to say were the catalyst, and some short covering today in corn. Didn't see much on the horizon for South American weather as a catalyst today, though.
I'm curious. I know you do a lot of work with the charts and looking at the moving averages and the Bollinger Bands and more. I noticed here the last several sessions that new crop December corn has really struggled at 454. That seems to be a price that we just can't seem to bust through in any meaningful way. Is that something you've seen? What are you watching on that new crop corn chart, Brian?
Well, I chuckle because you said it seems like. It's not seems like. We haven't. The market hasn't, right? So the market hasn't. So if you look at a chart and you look today, 453 is the closing price there. The high on the 18th, 457. The high on the 11th, 457 and 3/4. The most recent low, 445. We're range bound. The market is range bound, anticipating that it'll probably see a negative acreage number. Let me back up. It'll see an acreage number that's higher, which is negative for price, or could be, and the market's trying to figure that out right now. So as the acreage report comes out, then attention will flow to weather and other things. I just can't get away from the prospect that that corn ending stock number could tighten. I just like the export number in corn. So I'm going to sound real bullish on corn, but when you look at the stocks of use in Brazil, you look at the stocks of use in the world front, you take China out of the equation. The numbers have kind of just continually tightened and tightened and tightened. And I think the confirmation or the affirmation for me is just how aggressive the fund money was buying into January, and then it pulled back and maybe got out. But I wouldn't be surprised if they start to build a long position again.
It's going to be very interesting, and it seems like we're marking time until these reports at the end of the month, and then you got the tariff day of April 2nd thrown in there too. It seems like the markets really want to get through those key items to figure out our direction, and then we can start focusing again on the weather and more. It just seems like producers too are maybe getting lulled to sleep a little bit here ahead of these key points that are coming up here, these key dates for the market, Brian.
Yeah, and I might push back. I don't know if they're being lulled to sleep so much as there's just not a real easy decision to make right now. Do you sell this old crop after seeing a drop off from where it came from? Remember, like on the May contract, the high was what, 518 and 3/4 recently, and then you look at the export sales number today, 58.9 million bushels. We're over 2 billion for the year, 2 billion 48 million. So we're really cranking it right along. That is over 400 million bushels than a year ago at this time. So something to think about, right? And last year yield 177. This year in the one, that's just called a little bit under 180, right? And arrows pointing downward on yield this year, late in the season, up last year. So it's an interesting study. I don't think farmers right now have an appetite to really want to defend 450 December corn. They know acreage is going to likely be up. The market knows that. It's not new news. There's probably 50 cents of weather premium built into that December price, but you need to really defend that in early March. I'm talking to a lot of farmers, and the answer, Jesse, is no. They just don't need to defend it right now. They'll roll the dice that we get some better activity, especially when they start looking at those numbers that I talked about on the world supply of corn and the need for big crops and tight inventory in Brazil. There won't be any corn out of Brazil probably until maybe July, maybe sooner, but it's certainly not going to be in the next several months. They may be tapped out of inventory. In fact, there's a rumor of Northeast Brazil importing or buying some U.S. corn. I haven't confirmed that.
Well, to your point, great thoughts there, and a lot of producers maybe not wanting to defend 450 corn, but I know you write a lot of great commentaries, and I follow a lot of those online. And you wrote one here Wednesday, looking ahead to the USDA reports and the volatility that could come with those. So, what should producers be thinking about as they get ready for those reports that we know can be so volatile, very market moving, depending on what those numbers say, Brian?
Right. So really, you're A plus. So the question is, okay, well, Brian's talking about his thoughts on the market, right? And the market's going to have information every day, a lot of information at the end of the month, right? So if the information at the end of the month isn't friendly, let's say for corn prices, well, what does a farmer do? Because I'm telling you that farmers don't have a lot of appetite to forward sell corn at this level. That doesn't mean they aren't looking at strategy and shouldn't look at strategy. The advent of short dated options give producers an opportunity to go into that report defending new crop prices, defending against a big inventory, or I'm sorry, a big acreage number, and maybe even an inventory number that could be negative. I don't know. I'm guessing it'll be a little positive on the stocks. But that's how I think you want to look at this. Look at which strategy can you use. So for my money, I'm looking at encouraging farmers to think about, well, how much does a put cost to defend 450 corn in the short date? So in the May contract or the June contract or July, or do we buy a July put, sell a July call, willing to take a hedge at 480 if that call gets exercised? So that's the right question. How do we defend this? Because the report's going to say something, the market's going to react to it. I'm giving you my best guess that I don't think there's a lot of reason that farmers will sell. But I'm going to be kind of coy. What does the market care what I think? The market's going to do whatever it does, and the collective vote is going to determine where the market heads.
We saw the Fed wrap up their meeting for March this week, left interest rates unchanged, had some interesting comments, though, from the Fed. How much is that macro picture at play here in the ag markets, Brian?
Well, interest rates are certainly important, right? And this is one of the reasons why I think farmers were aggressively selling corn in the rally into the midwinter months, right? There was no reason not to when you start penciling out, okay, I've got a rally of a certain percent. The world's not going to run out of corn. I've got higher interest rates. I need to pay bills and I want to get out from under that. Now, I'm saying this from my conversation with farmers, but this is a year where if we have farmers that have dollars in their account or they're making dollars in their account, they're pretty quick to take it. And the language is pretty similar to a lot of them. They say, you know what, I can put that toward my loan and pay down on interest or pay in principal and reduce my interest. That just makes logical sense. So they're receptive to ways to try and reduce exposure to risk, whether it be interest rate risk or whatnot. So I think it does play a big part. Maybe the bigger part, though, is loan availability, how much they're going to get from lenders, and then what they can buy with that from an input. Is there going to be enough money to really juice the crops in the year ahead, really do whatever it takes to get that high end yield? It may be a year where some farmers, or maybe many farmers, have to ration that out and be smart about it, but may not just have the resources to just go full bore into again, my term, juice the crop, really, fertilize high fungicides, all those expenses that add up.
Brian Doherty, Senior Market Advisor, Total Farm Marketing, with us here today on Market Talk. Let's go over to the protein sector. How about the dairy market? Let's start there, Brian. What are some notes you have for us in dairy this week?
I was going to say, let's not. uh, it's been a tough go, and it's not really a laughing matter, but it is from the perspective that it provides these drawdown in prices have providing really good opportunity for demand to develop and to fill pipelines and to get that moving. But the dairy industry is just struggling. I think not the beef industry, but the dairy industry is really struggling with just demand and just not kind of seeing that strong demand cycle back in just yet. Now, we always have to be a little careful because demand builds on low prices. It doesn't respond quickly. But the milk market's had a pretty tough go with it. We've got some contracts, one contract today, April under $17, with a 16 in front of it. So that's a level we haven't visited to for some time. But what it is just a reflection that the technicals look weak, the fundamentals remain just enough negative to keep prices in check. But it should create demand. But it's a tough go. We've encouraged producers to be defensive minded for some time. Regardless of the tool, just expect that $19, $20 milk in a year where we could see some expansion and have ample, cheaper feed, that you're likely to see at some point the market come under pressure. Well, it's been kind of ugly here the last 6-8 weeks. So the milk market has really struggled and has yet to show a sign of a bottom. Give you a case in point, today I've got a bigger trading range than yesterday at the very bottom of the market. And you'd think, boy, if market just closed higher, that's a bullish key reversal, sign of a bottom. But it's not looking like it's going to close higher. I've got April contract down 11 right now. So it's just a big outside day with a negative confirmation at this point.
I know you mentioned when we started, we probably don't have to talk cattle. It just continues to work its way higher. But I'd be remiss if I didn't at least bring up the proteins on the cattle and the hogs. Weekly export sales, beef was down 29%. Pork was a marketing year low, was down 11% from the previous week. So not a great week when it comes to export demand for beef and pork. I mean, what's your perception as you look across cattle and hogs right now, Brian?
Well, what you said has such a ring of truth to it that these higher prices may be curbing at least import demand, right? Um, I sound like a broken record. We go back to the cattle. It's a supply issue in cattle on a larger scale. The question is whether demand can develop at these high prices, and that's been my argument for the last $10 or $20 in this cattle market. Is are we building new demand avenues? And I just don't see that we are. Case in point, I was with my wife. We were at a big retail sector. Look at the beef, puts it down, goes over, and you got a rotisserie chicken that's $4 or $5. It's a full chicken. And she took not one, but two chickens. So my point is that consumers can get pretty finicky in a hurry, and they love beef. And maybe we're at an autonomous level of demand, but these high prices, if the consumer backs away at all, that's, I think, going to be felt very quickly. And I don't think that the Packers are going to waste any time quickly changing their bids. Now, that being said, there's no sign of that yet, which is just a sign of an amazing, resilient market. It looked like it tipped over at the end of January and maybe tipped over for the year, and it's come roaring back. Second opportunity, though, to hedge these cattle, protect them with puts. There was a lot of phone calls we took after the market dumped out in January. Farmers or ranchers or whomever is saying, gosh, I wish I would have done something. I think I will hold or I'll do something now. Well, you got to do it on a rally. So don't get too comfortable with this rally is my messaging.
Brian, final thoughts, anything else you'd share or reiterate this week?
Well, I want to share this, that there's cattle on feed report tomorrow, Friday. And then we've got the quarterly stocks and acreage report. I talked about those earlier. So those are some really big reports. Also, weather becomes a little bit more important every day for spring field work and activity. And there's nothing urgent or necessary that I see in any part of the country that's really aligning with a concern. but those things will start to move up. So watch the weather, be cognizant, be aware. Something like this acreage report, you can roll the dice and do nothing, which might prove beneficial. You could sell and might prove not so beneficial, or you could do something in the option conceptually with puts or buy put sell calls and take some defensive measuring. The row crops are still struggling worldwide, regardless of my bias that the corn bullish spring is being compressed, and it's probably just a matter of time before we get better prices.
Brian, if folks want to reach out to you there at Total Farm Marketing, I know a few ways to get connected with you. How could folks reach you?
The easiest way is a phone call, 800-334-9779. And then if you want to email me, that's great too. Appreciate either. It's Brian with a Y at totalfarmmarketing.com, or check out our website, totalfarmmarketing.com. Put a www in front of that. And we got great resources, and you can connect that way with me or any of my team members that way as well.
Always enjoyed the conversation. Brian Doherty, Total Farm Marketing. Thanks for being with us. Have a great weekend, sir, and we will talk to you next week.
All right. My pleasure. Thank you very much.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.